I'd like to, invite our fellow panellists, Warwick Smith, CEO of American Pacific, and Dan Symons, President and CEO of C3 Metals. So thank you all for joining us today. And as I said, a lot of copper-related questions just coming out of Frank's presentation. So I think this will probably be of a lot of interest for the people in the room. So maybe to get us going, as we've just been talking about the incentive price point, Frank, maybe you could just go into a little bit more detail on the factors that you see influencing this at the moment.
Oh, absolutely. So with regards to the way we approach the incentive price conversation is we do look at all the parameters of the mine. So the location, the grades, the strip ratios, all the technical parameters, and also the location of the project would play a role. And absolutely the WACC, so the interest rates will also determine where that incentive price goes. So there's a lot of sensitivity. 8,000 is a number that's, let's say, a set of assumptions. But when you flex it up or down, it can go from anywhere from 7, but usually higher up to maybe 8 or 9, or 9 or 10. So a lot of things go into that that calculation. So.
Yeah, great, thank you. So Warwick and Dan, perhaps did you want to?
Yeah, I wanted to chime in for Frank for 1 second, just from your experience with Vale. I mean, so from an American Pacific standpoint, we've got a partnership with Dowa Mining and Metals out of Japan, the largest smelter out of Japan. That's in Alaska. And then down in Montana, we're partnered with Rio Tinto. I'd love to hear from your perspective what Vale's looking for in a project, you know, size, potential, et cetera, jurisdiction. I realize we're going back in the past, but it would be interesting to hear.
Yeah, I'm happy to answer. So a major like that is looking for scale. So looking for very large projects, a project that they can also grow on. So I don't, you know, let's say from a copper side, looking at 100 kiloton minimum, let's say, annual output. A jurisdiction where they're comfortable operating. As I said, like Vale had bad experiences in jurisdictions where either there's a lack of labor, there's issues with the government, rather than, you know, non-cooperative governments and so on. So the key factors are scale and jurisdictions that they're comfortable in operating.
Yeah, and you know, I joined C3 Metals 13 months ago, and previous to joining C3 Metals, I was running the head of corporate development, and my whole career has really been focused in M&A in the sector. And I can say firsthand, the reason I joined C3 was looking at the opportunity to get involved and get exposure to copper. I've spent my entire career in the precious metals side of the business. And as somebody who was working for a precious metals company with 5 operating mines and good growth, and looking at, you know, the larger companies being more of a mid-tier producer, looking at larger companies when they would approach us and look at our assets, it became very clear to me, for all the reasons that Frank's talked about today, that, you know, we think we're going to be in a pretty sustained bull run in copper. And you would be absolutely shocked at the precious metals companies that are scrambling to get copper exposure in their portfolios right now. So when we think about the big companies, obviously the biggest players like the BHPs, the Rio Tintos, the Vales, but we also see, you know, the Barricks and the Newmonts and the Agnico Eagles and those sorts of companies making a big push to add copper exposure to their portfolios because they can see where it's going as well. And you know, just thinking from an M&A perspective, because that's been my background in my career, I think that's something that is not so well known to the generalist investor today, is just the appetite for not just the large diversified miners, but also the precious metal miners to gain exposure today.
I'll chime in on that because American Pacific, smaller than a mid-tier miner at this point, but at the time last year we were about $100 million market cap, and one of the things we went out aggressively looking for was another copper asset. We looked at the landscape and said, you know, if the world's looking to go net zero by 2030, you know, you're going to need a lot of copper to do that. So came across Palmer, and that ended up being the final asset that we chose. But, you know, in a position where we're reviewing 60, 70 projects a year for M&A, copper became the focus, and Palmer ended up being the right fit for our company. But so even on a junior scale, we're still looking. You know, we're aggressively looking for those copper assets that can become targets of mid-tiers, et cetera.
Yeah, and I don't think there's really, you know, Frank apologize, I missed the beginning of your presentation in another meeting, but I don't think there's enough investment going on from the juniors like us at C3 now into the copper space. You know, people are talking about battery metals and focusing on lithium and focusing on some of these other things, but you know, there's 5 times as much copper used in an EV versus a gas vehicle. And then you start thinking about the charging stations, and up to 25 kilograms of copper in a charging station. And you start thinking, well, if we're going to green technology, we're not going to be using those charging stations are not going to be hooked up to coal-fired plants or diesel-fired plants. They're going to be hooked up to solar or wind. And you start looking at 4.7 tons of copper per megawatt in a solar field, or you start looking at 4.7 tons of copper in a wind turbine. There's no way around it. If the world does have an appetite to get off of combustion engines and onto electric vehicles, it will have to run higher, and that demand will pick up. I do think there was a question earlier about what happens. We have a couple of wars going on right now. If you look at the inverted yield curve, for instance, it does look like there's a high potential that we're headed for recession. That can slow the natural, some of the infrastructure build out that would come, that would slow it. But you know, if we think about where copper is sitting today, roughly around $3.60 a pound, if you looked at that backdrop and you said, it looks like there could be a fairly severe global recession on the horizon, you wouldn't expect copper to be holding in as well as it is. And I think that's what it's telling us, is the underlying fundamental demand and the lack of supply and the time that it'll take supply to come into the market is really supporting a price, even in an environment that it looks like it would be relatively negative.
Yeah, well said. I mean, if there's going to be this green revolution, you're going green via copper. All the excitement that lithium gets, I think, is somewhat well-deserved, but copper's ahead of that cycle. You need, your average gasoline car takes 50 pounds of copper. If you're driving a Tesla, it's 187 pounds of copper. There's 2 million EVs on the road now, and they're saying by 2030 in the US, they want half the cars to be electric. That's 42 million cars. It's a hell of a lot of copper.
Yeah, thanks, guys. I mean, you've just said you don't think the juniors are doing enough in this space yet. So where are the copper exploration dollars being spent, and where does the focus need to shift to?
I think part of the challenge is a lot of these copper deposits are really large porphyry style deposits, and they're not only capital intensive for a large company. You're looking at multi-billion-dollar capex decisions to go and build one of these mines, but they're also very expensive for a junior exploration company to go out and delineate these deposits. And what we see is particularly in the current junior resource sector, it's I've been doing this for a while, so I've seen cycles, but this is probably the worst I've seen in the last decade for capital and risk capital coming into fund. So companies sometimes across the landscape go to where they can attract capital from a survival standpoint, as opposed to having a fundamental long-term view. And that's why I think we've seen, again, I think well-deserved for lithium as well, but we've seen a lot of companies switch from being a gold company to a lithium company, or a copper company to a lithium company, just because that's where they're able to attract investment and survive as a junior company. For when you think about the business model of a junior, where you have no revenue and you're relying on the equity markets to fund you to go out and make discoveries. What we're seeing now is good. We firmly believe good projects find capital in bad markets, and we raised $5 million in April, and it was not a great market, but we were able to do it at market with no discount and no warrant associated to it, because you find the right institutional investor support. But we're also seeing a lot more today than we would have seen a decade ago, of the larger companies really starting to look, and because of the supply demand fundamentals in that gap, we're seeing a lot of these large companies really starting to look at really early stage projects and getting their geology teams involved and saying, maybe we should be making strategic investments early. And it sounds like, for instance, Warwick, you've had that experience recently and brought in some.
Yeah, I'll chime in on that. I mean, you're talking about good projects, will end up getting funded. It's only companies like C3 that are exceptionally well run and have good people backing them that's where that is actually true in this market. You got to look for the top tier companies and the companies that are going to be able to accelerate the growth of these assets in good markets or bad. C3 is one of those for sure. From an American Pacific standpoint, I mean, we're fond of saying if you're a small family office, a smaller fund, or a retail investor, look for, and you're interested in juniors. At least there's a few of us left. It's worth looking at those that already have majors involved, because in many ways they've done the due diligence for you. I can tell you, before Rio Tinto spends $1, they think that they can find it, and they know if they find it, they can put it in production. I've gone through it. It's a lot of work, but the juice is worth the squeeze. So from the American Pacific standpoint, we like copper projects. Yes, they're big. They're going to be capital intensive, but the copper projects we're working on are backed by majors. Doe is spending $25 million US on our project this year, right? So Rio Tinto's got to spend $30 million US to earn their percentage. So we've got good, strong partnerships which are driving the assets forward even in a tough market. Those assets backed by those companies have the opportunity to be large, and that's where the win for investors can be.
Great, thank you. And I mean, in terms of kind of how these assets are being valued and what that looks like, what are how is that being de-risked? Frank, maybe you can talk about what are the key factors in the valuation when it comes to copper assets.
It's actually kind of touched on the question that you asked. So I would say risk and the stage where the project is probably one of the key factors. Like you mentioned, involvement of a major is important because they would have de-risked from their perspective. So if the shovel didn't hit the ground yet, there's a risk. Risk discount to the valuation, and the more it is, the more holes you have, the more you find, and especially if you start actually developing, having the permits, that's just de-risking the project and just increases the valuation more and more and more. So that's kind of the key consideration in terms of the valuation itself. Besides, let's say, how big you are, what grade you have, what the other characteristics of the deposit itself, but it's just a risk factor. I don't know.
Yeah, I was going to say, to Dan's point as well, it's kind of nice seeing these some of the majors coming down, looking at the more junior companies, even though they've got larger assets. That's something that's been missing, I think, from the market for some time. So it's nice to see the Doas, the Vales, the Rios of the world looking at these assets as a way for them to grow their portfolio. Probably at this point realizing that if we're going to get to 2030, we're going to need more copper. Getting those online and exploring those assets now is where they need to be. They're not going to spend that themselves. I mean, typically now the majors are using the juniors as kind of their exploration arm, but it's nice to see that in copper.
Yeah, completely agree. And we're from a C3 perspective, we're in a position where we think we're at the onset of a pretty new and meaningful copper gold discovery on multiple porphyries over a 30-kilometer strike extent in Jamaica. And the amount we've just in the last 5 weeks we've managed to see some reasonable performance on the back of some drill results, as you see with these companies going from the market saying, oh, this is a prospective property, but we don't have drill holes in it yet. You get drill holes into it. We're up 87% in the last 5 weeks in a really, really difficult market. And what that's led to is, your phone rings from all these big guys and saying, oh, look, we could put some money in to earn in on a percentage of the project. And then I have to sit back and push back and say, look, it's really too early because you don't want to give away. You have to have an idea of what your arms are around before you want to give up something at the asset level. And you have to try and push these guys into more of, look, we can talk about an equity position at the corporate level for something small to maintain that competitive tension, because you don't, again, want someone in there, then the market says, well, you have it's yours now and from now and in the future. So there is a lot of strategy that goes around the right time of bringing in a strategic investor, either at the asset or corporate level, to make sure you're maximizing value for shareholders. So, I think about a company that I was with previously, if South Carolina of all places, people didn't know there was a bunch of gold in South Carolina. We went out, we delineated 4 million ounces of gold in the Hale gold mine deposit. We took that company through feasibility, permitting, all the de-risking elements that Frank just talked about. We raised the capital to build it. We were 6 months into a 24-month construction project to build that mine. And we were then acquired by Oceana Gold Corp, and that's now one of their flagship mines. But we had so many opportunities along that discovery curve to bring in deep-pocketed larger companies, but we felt at that time, and that market environment as well, it was better for us to, if we could continue to fund with traditional equity investors, to keep that competitive tension, which then down the road played out very well for us when it got to a bidding process at the end for the company. So there are different ways to look at it in the near term or short term. For C3 Metals, we're not opposed to bringing in someone strategic, but I think at this point it would have to be we don't want to get too far ahead of ourselves with a big position so early in where we are if we're onto a meaningful discovery, because you can give away a lot more than you think you are when you're early on something.
Yeah, agreed. Smart strategy. Again, when you're in these types of markets, you got to look for the sort of cream of the crop. And if you've got guys like Dan at the helm who know how to raise capital, who know how to work these markets, that's an incredible advantage and certainly a smart strategy for C3.
Great. I mean, do you think that the addition of copper to the US critical mineral list is going to accelerate a lot of this interest, or do you think it's not going to have a big impact on? Do you think it's already there?
It's made limited sense to me that it wasn't there from the get-go, to be honest.
Yeah.
That would be my comment on it. I mean, it should have been seen as a critical metal from the hop. Why it wasn't, well, debatable, but yeah, glad to see that it is now.
Yeah.
Maybe I'll just add a little bit. So being on the list, it certainly highlights copper as something that's needed, critically so, but also invites investment to minimize demand. Because there's from a government's perspective, from a societal perspective, it doesn't matter whether I want to solve it so that it's not critical anymore. So either I'm going to try and incent more development of copper, or I'm going to fund projects to minimize the use of copper and encourage substitution to, let's say, aluminum, things like that. I think copper has a huge and strong story, but if it doesn't deliver, it's going to be substituted out. There's no, let's say, that's because society needs something that is copper-like. Plenty of aluminum there. That's okay. So it's bigger, fatter wire. It's maybe a bit heavier, but in order to do what we need to do as a society, it needs to be done. So highlighting copper as a critical metal means that we want copper. We don't want anything else. We want copper. So let's get that investment going and get those projects up and running.
Yeah, I agree with everything both of you said. I can't believe it's taken this long, and you're right. If we don't bring it online and show that we have a pathway to bring it online, the market will look for substitutions. I think it can't hurt though. It's from my experience working my entire career until the last 13 months joining C3 in the precious metal side, I can already see the advantages when you're talking about dealing with governments and you're talking about environmental footprint. If you can go and say, look, we are trying to bring a metal to market that helps with a clean energy transition that's absolutely needed. If we're looking to protect the environment, you need more copper coming to market than it is to say, that here's a gold mine that we're going to bring in. Every ounce of gold that's above the ground is available at a certain price. It can trade hands where copper is actually used and consumed. So it's just a completely different mindset from a government perspective and a regulatory perspective of, okay, this makes a lot of sense to me to be part of bringing on something that's going to be used for the greater good of the world as we move forward.
Yeah.
Maybe I have a question for the panel. Do you think being on the critical list will encourage us to change regulatory environment in some way to encourage? Because I know, let's say in Canada, it's becoming difficult to get permitting and things like that. Do you see the fact that we recognize copper being on the critical list to change how government actually deals with these things?
I mean, I think the short answer is you would hope so. I've always focused in the Western U.S. That's where my background's been since probably the last 15 years or so. Certainly being on the critical metals list will be helpful. The U.S. desperately needs deregulation in terms of mining. It's painful. It's a fairly old, antiquated system. I think there's a lot of great mines in the Western U.S. Speaking at it from experience, you've got land that's PLM, you've got land that's Forest Service. The rock is the same on either side. But your difference in terms of being able to permit is tremendous, right? So having been through that process, certainly having it on the critical metals list should help. Depending on what side of the aisle you stand on, this may or may not offend you, but a Republican government would probably help too. But having worked under Obama, Trump, and now Biden, you can see significant differences. But the nice part with the Western U.S. is you can still get things done. But certainly, I mean, I can give direct examples of, just from in terms of even drill permitting. Under Trump, it was taking us, 4 or 5 business days to get permits. And now it'll take us a month and a half. So when you start taking that back and looking at it from a production standpoint, it makes a very significant difference. And that's what we're going up through in Alaska right now, going through permitting and the challenges that brings. Certainly a reduction in red tape would be appreciated.
So when you're talking about drill permitting timelines, see for a month and a half in some cases can be a dream as well. So, at C3, we have assets. We have a 30,000 hectare package that we've put together over the last couple of years in Peru, in southern Peru, and we're as well as what we're focused on, a 20,000 hectare package in Jamaica. And we're spending the bulk of our investment today in Jamaica. Both what we have in Peru and Jamaica are both equally very highly prospective. But it comes down to where are we spending the investment dollar and spending it in the jurisdiction that's workable from a government standpoint. So if I just contrast the two areas right now, and I think it will change because you're seeing, for instance, an area like Peru that today is the number 2 producer of copper globally after Chile. But today, whether you're a large company, a junior exploration company, a foreign company, or a Peruvian company, when you acquire a new mineral concession in Peru, the average time frame to get a permit to drill is 2 years today. It's just not sustainable. So you're seeing a lot of foreign investment leave a jurisdiction like that and go into other areas, where I contrast to where we are in Jamaica, where we receive drill permits in 2 months. I'm used to renewing your drill permits annually. In Jamaica, they're here, have them for 5 years, unlimited drill holes, unlimited platforms, because, but it's also the environment that we're in there, where mining's the number 2 industry in the country, and it's derived about a very, very, very large bauxite industry that's been running for over 70 years, bauxite being a key mineral used in the production of aluminum. And the government's looking at this and saying, okay, this industry's been going for over 70 years. We used to be number 1 in the world in exports. We're down to number 6. It's a very reasonable, but it is a 25% corporate tax rate. When you're exporting $500 million to $600 million US annually, it's a meaningful revenue driver for a population of 2.8 million people on an island. And they're saying, even though we have 2 or 3 decades still in front of us, the reserves are in decline, and the lever the Jamaican government's trying to pull it's right on the ministry's website. They're looking to promote and encourage investment in non-bauxite metallic minerals as a way of diversifying the mineral sector. Tourism's number 1 industry, mining's number 2, and they're saying, how are we going to pull that lever? So, I think being on the critical minerals list certainly helps. It helps a lot from environmental NGO point of view as well, because it leads to a lot of arguments of why we need to bring this supply online and why we need to build this mine. From a government perspective, it does kind of go back to what is the motivation of that particular government at that particular time. And, I just see such a stark contrast between the two areas, for instance, where we are right now, where you have 2 highly prospective areas, but the workability in one is definitely a lot different than the other.
Yeah, it's not unique to Jamaica either. I mean, I can give a a direct example, we're talking about getting these permits and, now it taking 6 weeks, that's all on BLM ground. If you're on Forest Service, we financed a uranium company, which the U.S. needs their own independent source of uranium, that was on Forest Service in the U.S., financed it 2 years for a permit. It's wild. I mean, literally, if you were, 300 yards across the line, you're on BLM, it's going to take you 6 weeks. Again, same rocks, etc. So, countries aren't unique in terms of their bureaucracies and some of their silly policies at times. But yeah, certainly in the Western U.S., you'd love to see that get tightened up a little bit.
Great. And what about other routes to kind of closing the potential deficit? So, potential technological breakthroughs in recovery from low grade ore. Is that something that you see having a big impact, or is it just more dollars in the ground?
Yeah, sure. I'll take it. So we do have new technology coming of sulfide leaching of ore, low-grade ores or tailings even. So that's, just so everybody is aware, that's in essence you're taking crushed rocks and putting in certain piles and then you're percolating acid. And some of these technologies use bioleaching as well, like the new tech from Rio, I believe. So the world of low-grade ores is massive. Like truly massive. The impediment here is the mineralization is unique, often in each of these things. So when you start leaching these things, the efficiency of the leach and what you get out of that leach, and then you have to refine it to purify it, will something that's maybe not as applicable. The tech is not applicable consistently in all of these different areas, but certainly this represents a step change. If we see more and more investment, if we see it more and more work, we definitely a step change in terms of helping close this gap. Yeah.
And I think one of the things that will bring that investment to close that gap is price. People when the copper price, I'm a firm believer, the copper price has to go higher. We may see some initial weakness if we get into a recession over the next year or something, but coming out of that, I think that we'll have a very large and sustained bull run. But when you think about that, there is going to be a point. You have some people saying over the next 30 years we're going to have this massive bull run. Well, I don't know if the price moves up to from $3.50 a pound to $7 a pound over the next 3 years or something, that's going to incentivize a lot of people. You think about just, Freeport's Grasberg mine. Our VP exploration at C3, he worked at Grasberg for 12 years of his career. In the last 5 years, ran all the geology for the underground block cave at Grasberg. And, the estimates if he has of the amount of copper that are just in the tailings for Grasberg, the price gets high enough, there will be a way to bring new supply online. But it doesn't happen overnight, and there has to be, as you say, investment into these new technologies, and then tweaking them and tailoring them for each ore body and making sure that it works. So again, I think we will see supply come online with price. It doesn't happen overnight. It takes a long time, and it takes several years, and that becomes again the opportunity as an investor today to maximize on that bull run.
Great, thank you. Just got a couple of minutes left. Do we have any questions for the panelists? No. Well, I think that was great. Thank you very much, guys. Any final comments?
For me, I think we talked a lot already. So my finalist comment is that this is an opportune time. I think if we think about where the copper is going to be and where it is right now, we can maybe say it's a depressed market. The time to get in is now to fund companies that are with Warwick and with Dan. They're incredible gems that we have. They're needed, and I hope you guys shake lots of hands and let's bring that copper online.
Thank you, everyone.
Great.
Yeah, appreciate it.